And so things like that we're seeing more often. We're definitely seeing more people push back on their lenders in terms of deductible limits. They want to take a higher deductible. And that makes so much sense in a lot of cases, right? But you have to get your lender on board. You have to have those conversations. And it's something that we're seeing things trend in that direction. I think we'll continue to see things trend in that direction. Any creative solutions that people can have where they have more control of the process and are not just at the mercy of the traditional insurance market, I think is going to continue to be more and more popular. The question then becomes for the folks who do have issues like severe loss history, undesirable geography and things like that. It's one thing to have some assets in an undesirable geographic location in your portfolio and you have a large portfolio and you kind of offset that with the rest of your risk. It's another thing if your thesis has been, hey, we're buying this asset class in coastal Florida for the last 10 years, right? And that's your whole portfolio. That looks different. That's a much tougher sell. So all of those things are good to consider. The one thing I will say, is over the last 2 to 3 years, more and more people keep asking about property captives. And what we see 90+% of the time is if you actually sit down and do the math on that, once people are faced with their, maximum probable loss and they actually see it in black and white, what they could be paying out of their pocket, they quickly realize why the carriers are charging so much and they don't want to take on that risk themselves.
Yeah.
So there's a lot of, I think the insurance market also is a function of everything else. We talked about the replacement cost valuations. Well, that's a function of a lot of things. That's a function of supply chain issues.